Nick Leeson, good morning from sunny, beautiful Belfast. How are you keeping?
Very well, Conor. It's not quite so sunny here, but you're looking good.
Yes, feeling fresh and sharp this morning. All good. Restrictions. We're getting an important announcement today at 3 o'clock in Belfast, so we're hoping that things are going to start to open up again, which is really, really good news. I'm just wondering, this past 7 days with Bull and Bear Capital, how have you been keeping? I'm following you every day. You're tweeting away and you're sharing content. What's the latest?
Yeah, I mean, the markets have been kind to us over the last week or so. I think the big thing that everybody's looking towards over the next couple of weeks are the earnings. So the big banks started to report yesterday. So we saw Goldman's and JP Morgan report. They all beat expectations. So there's lots of different forecasts out there. If you look at the S&P 500, people are forecasting that year-on-year earnings will be up 25%. Some people are putting it up to 30%. And it's all a way of gauging how good this economic recovery is going to be. But Goldman's were the standout numbers yesterday. You know, it was a massive beat. It was a blowout number. It was much, much bigger than anybody could have expected.
Yeah, it's fascinating stuff. I mean, these conversations have been really positive over the last couple of months when we do the Money Clinic and we have these conversations. But I was interested in an article which I seen online yesterday. David Solomon, the boss of Goldman Sachs, came out advocating and talking about Bitcoin again. And actually, what I read was he was suggesting that the interest, Goldman Sachs's real interest in Bitcoin, is part driven by delivering for their client base, and they're getting a lot of requests and interest from their client base in Bitcoin. And I see on the markets like Bitcoin is rallying again. What is it up to $63,000 a coin?
Yeah, I think it. Well, I'll share the screen on Bitcoin with you first, Conor. So there we go. You can see. I think we almost touched 64,000 yesterday. So 63,600. It's come off a little bit today, but you know, like the thing with Goldman Sachs and with all of these big investment banks. I mean, Goldman Sachs made $6.71 billion in the first quarter, right? It was their best ever quarter. And if they see an opportunity to make money, they're going to grab it. So you've got all of this. So like I question quite how or whether he's being disingenuous. You know, like if you go into
that's what I really wanted to find out, what your view is on that. So he's basically saying in this article, the head of Goldman Sachs, we're sort of responding to client needs. Suggesting that because we have so much interest in it, but surely if they're supposed to be advising the client, then there's is it a little disingenuous to be suggesting that it's based on client needs?
Well, I think it is disingenuous. I mean, if you look at any investment bank, if you can earn fees, they're going to take advantage of that. So if they're providing a service for a client, I think one of the things when you look in that article, Conor, is they're not trading this on a proprietary basis. I mean, there were a couple of other things that happened yesterday. Coinbase was listed on NASDAQ. So, you know, one of the big coin exchanges, but you know, if this is such a good thing and everybody should be getting into it, what are we? Sorry, I'll just stop sharing that with you there. You know, what are we gonna? Why are they listing on an old-fashioned exchange when things are supposed to be moving forward and we're looking at these cryptos and everything is very, very positive in that regard? So I think from Goldman's perspective, they're never going to refuse a fee. We all know that from banks. You look at Davies and the way that they've done things over the years. You look at this whole Bill Hwang thing, where again, it was about a fee grab. People were getting paid to facilitate what their customer needed, but they're not really doing the same sort of stuff themselves. So I think it's very disingenuous. You know, they're not trading it from a proprietary basis. There's no real offering from Goldman's in terms of a crypto wallet. This is very much just delivering what the client is looking for, which there's nothing wrong with. But, you know, still there are questions in the back of my mind about how long this is going to be around, or is it the biggest pyramid scheme ever? You know, I'm no closer to working that out myself, as I'm sure you're not either.
Yeah, well, I'm interested because cryptocurrency is something that I didn't know much about, and Bitcoin, I'm not invested in it, but I'm interested in watching trends. And you know, like one of the things you said to me a few weeks ago, I had asked you, is it a financial mirage? Because people have very different views on cryptocurrencies, and I'm quite cautious myself. But the thing you did say to me then was that, there's more and more institutions have got involved in this game, and that has brought this air of credibility to it. And that's why I'm thinking from Goldman's point of view, are they being disingenuous by saying, well, our clients are sort of asking us about this all of the time, but if they've invested huge sums of money, they're going to have to talk it up. That's surely the natural progression then, yeah?
Yeah, well, absolutely. I mean, I think there's a fee side of it, which they're definitely not going to ignore when they can make the sums of money that they're currently making. And there's more institutional interest in this than we've ever seen in the past. And with Coinbase listing, it gives it another air of credibility. So, a couple of weeks ago, I think I told you off air that I invested in some cryptocurrencies myself, just to see what it's all about. Not a huge sum of money. But it's up 20%. But then I was speaking to somebody who knows the crypto market, and if and I thought 20% was quite good. I thought it was fantastic. But somebody said that if you put all of the names of all the cryptocurrencies on a wall and you threw a dart at it, over the last 3 weeks, you'd be up 40%. So, there's a real interest, there's a real trend going on in these markets at the moment, and you just worry that there's a lot of lemmings walking towards that cliff, and eventually they're all going to fall off fairly soon. We've spoken about it in regard to GameStop. There is this huge herd mentality when you're looking at cryptocurrencies, and people want to make money. There's a certain element of greed, and I think that's what's driving it. And the question is, how much further can it be driven? Goldman's coming out with these sort of statements probably gives it an extra little bit of longevity, because Goldman's are very, widely respected.
But if you listen to you have said this, your sort of approach to this is, how much further can it go? So to me, if I'm reading between the lines, you're sort of suggesting sort of maxed out. Like this is getting hot. However, as more and more, for example, real estate businesses in the United States start to accept Bitcoin, for example, by way of payment, others are saying the complete opposite to you, which is we're only scratching the surface here, because as more and more people start to accept this currency or this form of currency as a method of payment, then the price of same could keep going up and up and up.
Yeah, well, I mean, obviously there is a certain amount of scarcity where Bitcoin is concerned. I think the key issue is, what are the central banks going to do?
Okay.
They're sitting on the sidelines. At some point, they're going to act. Do they outlaw it? Do they, introduce their own digital currencies, which we're seeing in different places like China and in the UAE now? And if there is a competitor, which is central government or central bank or government backed, is that going to see the demise of Bitcoin? Does Coinbase just disappear because nobody will invest in it anymore if it is regulated to the extreme? So there's lots of issues. I have a question for you.
Right, 2 minutes, yep.
Okay, there were many people are asking what funding is available out there. Are banks genuinely lending to SMEs at the moment? Unfortunately, we're seeing more stories about loans being sold, about vulture funds getting involved again. Is there money out there?
Right, okay, so there's a wall of money out there, right? So there's loads of money, lots of money available. However, you have to then break it down. So what I try and do to people or with people is try and educate people around what's available, understanding the markets. The challenge for Ireland is within the Irish banking system, what's happening there, it's contracting. So they're closing down branches all over the place. Ulster Bank is leaving the market. The problem and challenge for Ireland and the Republic of Ireland, it's harder for banks to make money because the tier 1 capital requirements are more, so they can make more money in other parts of the world. So we only have 3 or 4 banks in the Republic of Ireland. So there's a real issue there. And the concern which I've had in the last 12 months is there is a liquidity crisis happening, more so for the SME sector. Big businesses with big balance sheets can always borrow money, leverage money, raise equity, la-dee-da. That's the way it works. But the smaller businesses, and we are a small business economy on the island, is where the difficulties lie. And the challenge there is there is a liquidity crisis. So Bank of Ireland, Ulster Bank, Danske Bank, it's very hard for small businesses to borrow money of these banks. And that is a real problem. The other challenge is it takes 6 to 9 months for the banks to reach a decision on credit applications. Major issue. It's something I want to focus on maybe in next week's conversation.